YouTube, what's up? Like I always say at the beginning of all my videos, hope y'all staying consistent on the journey, doing what you want to do. You know what I mean? Staying true to yourself. Don't get deteriorated from your journey. Deteriorated means broken down spiritually and mentally. Don't feel like you're getting too hard. Don't feel like you're doing too much of good and you don't feel like it's paying off yet. It's coming. Just stay locked in, stay focused. Right now, y'all see my eye messed up. I was standing outside day before yesterday, and it was raining. I was standing under a tree, and I believe something in the tree maybe got in my eye with the rain while it was raining. So I just got to deal with it. I've been putting eye drops in my eye with a hot rag just to try to get it to leak out, whatever it is. I ain't taking no medicine. I ain't going to no hospital. It's minor. Most of y'all would have had this symptom or this problem and would never kept posting or made an excuse and said, give me 2-3 days to post. But now I got to post anyway. It's about no matter what come your way, life gonna life. Just because life gonna life don't mean you change your goals or you change your rules. No, you stick to the plan no matter what. You wake up and you do what you got to do. You show gratitude by being consistent. You know what I mean? Discipline is self-love. If you really love yourself, you will discipline yourself when nobody has to tell you what to do or what you need to do to stay disciplined or to stay on top of whatever you're doing at the moment. But yeah, I just wanted to come on here to stay consistent with my posting and to tell y'all, if you ain't trading yet, you need to start trading. Don't rush into a live market. Don't rush and buy a prop firm account. But you need to start looking at some YouTube videos and podcasting and start studying the foreign exchange market. Even if you want to trade options or futures or even cryptos, you need to start researching day trading or trading in general. It's a payoff. It's a big payoff once you understand reading the charts, reading price action, understanding candlestick patterns, and so forth and so forth. Like I said in previous of my videos, come September 3rd, it'll be 2 years that I've been trading, day trading, Forex, and I have yet to make a withdrawal from Forex, but I have been winning a lot of trades, just been dealing with the typical beginner trader problems that every new trader start with and go with, which is revenge trading once you lose a trade, over leveraging. Once you place a lot size on a certain trade, you get nervous, your heart starts beating fast. You don't start sweating, but you making sure every tick count or every counter count. The closer the candlestick get to your stop loss, you get nervous and you want to hurry up and not FOMO in that trade, but you want to hurry up and get out the trade because you risk too much and you don't want to take that loss. You haven't accepted the risk. That means you're risking too much on that lot size. Over trading, meaning you don't want 2 trades for the day. You got a small account, you risk properly according to your account balance, but the win wasn't significant or valuable enough for you to consider that you did good for the day. So you enter again and then you lose. Now you gave back all the profit that you won, and now your mindset is going into tilt. And now you just want to make back the profit you made, take another trade, which is number 4, and you lose. Now you're telling yourself, as long as you can get back to break even what you started with for the day, so you take another trade, and now you're in a double negative, and now you done lost your profit. You done lost what you said you were going to risk for the day, and you done lost more. So now you even more matter, and now you go on tilt, risk the whole account just to try to make something back, just to say you got to win for the day. That's over trading. Revenge trading, meaning you only said you were going to take 2 trades for the day. They played out, the first trade is good. Your account is a nice size, but the trade you put on with the risk, it wasn't enough with the RR, 1 to 3 or 1 to 4. You don't feel like it's valuable enough, so you take another trade. You following your rules. You said 2 trades a day. The second trade, you put a little higher risk on because the first trade wasn't valuable enough. It didn't hit your RR like you wanted to, and you got out early being nervous. So your second trade going into profit. You're going for a 1 to 5. It get to a 1 to 3 and start coming back down. You either get out early because you just want to make some money. You just want to have a win for the day. As far as in psychology-wise, you want to know that you did good and you were right on the setup. Or it go to RR3, and you're trying to get it to go to your TP, which is RR5, reach the reward, 5-to-1 ratio. It go to your 3-to-1 ratio and then come back and stop you out. So you get mad. And then now you're thinking instead of buying, it's selling. So you get back in for a sale, and then it start going back up and you lose. And now you're on a repeated mental cycle of just going up and down, chasing the candlestick instead of reading price action. Instead of marking your areas of interest, your point of interest, your zones on your higher time frame, 1 hour, 4 hour, even sometimes your dailies, depending on what your goal is for that day and that setup. You just want to go on the 1 minute and 5 minute and hurry up and get in and try to make some money because you're scared to hold the trade. That's not the right way to trade or the correct way to go about it. So yeah, that's what I gained from the first 2 years of trading psychology-wise. Like I said, I haven't made no withdrawals, so I don't gotta lie. But I blown 2 prop firm accounts, and they were very small accounts. Accounts as far as in, I had a 5K account, and then I had another, both of them was 5K accounts. I never went for the 100K funded account or 200K funded account like everyone else. I always took it slow with prop firms, not saying I don't trust the payout or trust the business of the prop firm. I just never went for a higher than 5K. It was a test run, and I failed both test runs. I didn't even pass the evaluation, and that was maybe a year ago within the first year of my trading. So now what I'm doing is I'm just focused on the live markets. With the live markets, you don't have to have a consistency rule. You don't have to be so precise with certain things as in the prop firms. One great thing that I can say about the prop firms with the rules, it would teach you how to manage yourself in the live trade, how not to risk so much in the live trade and not to go on tilt. Because if you use the same consistency rule on a prop firm and you use it on a live account, you'll understand management, you're a money manager better, you'll understand risk reward better. But with me, I got a certain strategic way of how I like to trade. I like to trade high risk and reward as far as in. I may risk 10%, 15%, sometimes even 20 or 30% on certain trades or even every trade because I'm a high risk trader and I've always been like this since I started. I never was the one to risk 2%, 1%, 5%. Don't get me wrong. Once your account get over $1 million on a live account or even prop firms and you have $1 million accumulated balance on one or multiple accounts depending on how you trade, you copy trading or you just traded on one account. Once you get past 7 figures, yes, 1 or 2% makes sense, 3% makes sense on a trade. 1% on $1 million is what, $10,000. So you get a $10,000 position, as far as in lot size on $1 million account, and you can catch a 1 to 4 or 1 to 5. That's 40, 50,000 made, and you can stay consistent with that in 20 trading days. Just say your win rate is 50%, and you can win 50% at 50K a day. You making $250,000 a month off $1 million account, so that's pretty good. And they're the same thing. That's more than having $1 million in a high yield savings account where you only get 4, 5 to 6% a year off that $1 million, and 5% a year off $1 million. You only getting maybe $5,000 a month, which is $60,000 a year, and you just made $250,000 in your first month, only risking 1% or 10% or 2%. So you got to understand the numbers when you're trading. But trading is a very good way to have money every day and to win every day, to be better as far as in a better person psychology-wise, mentally-wise, money marketing-wise, as far as in reading the charts and analyzing certain situations and then execute. It will bring you into a better mindset as a person. So I advise everybody to get into trading, not just like I said, just rush into it, but do your research first and take your time. A lot of people get profitable the first 6 months, the first 2 years, the first 5 years. It's different depending on how serious you take it and how far and how fast you're willing to learn. But like I said, I just wanted to come on here and speak about trading psychology and why I think everybody should get into trading. It's very beneficial mentally, personally, financially, spiritually, and overall just on your journey as a human on this earth. Because trading show you a lot of things that you would never thought about you have as a person until you start trading. So love yourself, love the journey, and like I always say, put the Most High in everything and watch how everything benefit. Deuce.